So we're going to talk about market trends, bull markets, bear markets, and sideways. When should you buy the dip? When should you wait? So hi everyone, welcome to the channel. Thank you for all your support. Again, leave a like, subscribe, hit that bell button, and most importantly, leave a comment. Honestly, over the moon with everything. A lot of people did comment, let me know if you were these people that I should be getting more subscribers. Back when I had like less than 5,000 subscribers, people were like, wow, you should have more subscribers. And I was like, yeah, it's fine. I'm, just doing content here. All of a sudden, bang. So massive appreciation. So we're going to talk today about bull market, up, woohoo, bear markets, beep, 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 down, and obviously the sideways rangy markets, and when and how it all works, and easy, simple methods for you to apply this as a beginner. So if you're totally new to the space, and if you're like a hobby sort of person, I just want to invest, I want to know if I'm buying at the right times, this is the video for you. Honestly, this is where everything for me came into fruition back in 2015, 2016, when I was first in stock market and then going into crypto. Knowing when to buy cryptocurrency is vital. You do not want to buy the dip that keeps on dipping. But like I say, keep it simple, you'll be fine, right? So first things first, obviously Bitcoin chat. I want to put this point out there because I know this happens a lot. And I'm going to say it now. This could come tumbling down. Okay? Why? Why, you ask? We've been higher, we've also been low. We've been high, we've also been low. We're currently high right now. If you said to me, right, imagine this as a conversation. We're around a dinner table, happy days, and I said to you, Ethereum is $1,400. Where do you think it went next? I can bet you bottom dollar if you put a chart of the Ethereum chart back in those 2017, 2018 days, and someone would say, we're not going to go down as low as $80, I'd imagine vast majority of people would tick that box. Trends are king. Simple. I'm a trend trader. I trade off psychological emotion based off what a trend is telling me. If it's in a downtrend, I don't buy. If it's in an uptrend, I buy. Simple as that, right? Buy the dip. In a downtrend, I use dollar cost averaging, which is what I showed in the last video, where you put a range on, you look at the monthly, you look at the weekly, you find areas of where it's been and it's currently coming down. It's like, oh, it's dying. Oh my God, help. Which is what we looked at yesterday, essentially. So what I want to do, again, fresh basic chart, which is like designed for the newbie, because this is what most people kind of get when they get onto the game. So what we looked at yesterday was this sort of thing where it's coming down severely. As you can see, it's in a downtrend, got a low, higher low, potential lower low coming, who knows. But we've got to look at this situation where we've been at a top, where can we retrace to? But what we're going to do, we're going to edit this chart a little bit. We're going to go to a different asset. Let's just look at, I don't know, Binance coin, BNB. Why not? It's the first thing that came into my head at the time. Hello. That is in an uptrend. It's an easy, obvious uptrend. We're going up, right? It's the situation where you get like this, where it's coming down. How do you know it's in that range? How do you know it's coming down? You need to think ahead of the curve. It's all well and good going back in time. Go, well, if you bought here, you could sell here. Yeah, people do that, I know. You need moving averages. Simple as that. That's all I want to say. Moving averages. Removes the noise, it makes it easy. And then you can set some parameter rules of your investing strategy. Simple. In an uptrend, you buy the dips, right? Where people keep saying, now buy the dip, buy the dip, buy the dip. Like this, for example. Look at this. Like, boom, dip. Boom, dip. Oh, shit. You're going to get to a point where you're going to be buying the dip that keeps on dipping. You do not want it. You want to be able to know exactly when you're in a downtrend and when you're thinking the average moving price is below the candles, it is then support. If it is above it and it's above, the price is falling away from that moving average and it's starting to turn and curve, and then that is resistance, that is when you need to stop doing any sort of dip buying. You then need to be patient and wait for the low orders. When that happens, you go to the higher time frames and you find areas of interest. So for example, here you sell profit, as an example, And you know in your head, looking back in time, looking left, you know that there's a level here. How do I know that that's going to replicate here? Well, it's past data. If you look left and you start looking at things, oh, look at this, we've got an area here. That could be one area you put an interest of an order. Another one could actually be Fibonacci. I know I'm jumping the gun here, but a Fibonacci level can also tell you where prices could go. 618 levels. Oh, hello. Happy days. Becomes resistance. Actually falls through again. Dies. Goes to the 786. All of these are there designed to help you. But you need to know first and foremost what is happening. Now, there's multiple different moving averages you can use. Simple as that. It's personal preference. I use the 8 EMA and the 13 EMA. I'm pretty quick with mine. I like mine quite nice and snug. And I'll show you on my chart in a bit what mine look like. But if you're a beginner, hi, welcome to the world of investing. You can use these on TradingView. You can use them on Binance. It's all the same sort of system in terms of TradingView, APIs, whatever. All you need to do, go to indicators and put in moving. Okay. Now, exponential is a bit quicker. Weighted's a bit more, obviously weighted. It goes off different variations, different formulas. Simplicity is key. Moving average. Now, you need 2 of these on your chart, in my opinion. I think I've got, no, I've not. Why is it not working? Boom. Hi. There we go. So, one is, in my opinion, very interesting. The 100. Why is 100 interesting? Now, I want you to tell me, if you want to, you don't have to, why that looks significant. What does it do? Why does it make life easy? Does it show you direction on a very, noiseless way? I personally believe it does, in my opinion. So the strategy that you'd adopt with this is, well, you'd buy when it's actually supported, and that is essentially support. Buy low, sell high. It becomes resistance. You do not need to buy the dip anymore. The next moving average is up to you. And I want to say that really easily. You can have a faster moving average, a 50, which will go closer. Now, why is this important? This allows you to start getting out of dodge a little bit quicker if you so wish to, and use a simple crossover method. But what it does tell you is it tells you, again, confluence with the trends. Higher time frames are king with this, in my opinion. If you look at the weekly time frame, for example, it will show you the same sort of situation. Once it all loads, that is, there we go, hello. So obviously, you can see here, weekly time frame, boom, off it goes. Different variations on the weekly though, as we would know. But when you look at this here, for example, you've got this massive, horrendous COVID crash, right? You shit yourself, it dumps, and obviously it rises. You need to make sure that you are in an uptrend. And what you need to be aware of is you've got to wait. You've got to be patient. You can't just jump in, because what could have happened here? This could have been an absolutely almighty, severe potential, crash going from this point here as a potential. Could have been. But you got to wait for confirmations. People would have been buying these kind of as a potential, but when you look left, there's all kinds of resistance. You didn't know what the time was going to be. Until you start getting elements of support, it makes life easy. So this is one situation you can use. 50 and 100, in my opinion, are very good, but you can keep it a lot more simple if you so wish to. You could use one. You can use maybe either the 50, which isn't too bad, or, in my opinion, I think the 100 is one of the best. You can change it though and make it even better. Why? You can use EMAs. The EMA 89 is a really good one as well. It is a Fibonacci number which has vital importance, so I will show you the difference between this one. Now, again, this is all entirely up to you. It's personal preference. It depends on your life. Sounds really daft me saying that, but if you're busy, if you've got 3 kids and a dog and a cat and a monkey running around havoc in your daily life, and you work a full-time job, the chances are you want to use a strategy like this, because you will be pretty, you don't have to wait too much. You can set nice alerts. It becomes very, very simple, but you need to know where the trend is going. You need to know, is it safe for me to buy here? Is it safe for me not to buy here? It's all that kind of good stuff. Now again, EMA, a little bit faster, but this is an 89. The 89, I think, is incredibly useful because, one, it is a Fibonacci number, and also it's a little bit quicker to allow you to get those gains. Now, how does it work in simple lines? So let's just look at BNB. We've obviously had this massive uptrend. We've rejected massively, And then what tends to happen here, it tends to start becoming resistance, where it starts topping and turning around. This is where it gets interesting. This is where you start looking and thinking, well, actually, are we going to continue going down? If you look left, though, you would have seen top, low, lower high, low, lower high. Hello. We've got problems here. We've rejected. So this here is the pullback of this potential move to try and go. Rejects, double top, off we go. There we go. Lower low, lower high, lower low, and then we stop here. But ultimately, you don't have to panic and just jump back in. You've got to look at what this area signifies. And again, I might be going a little bit technical, but we'll have a little look at that area in a second. Either way, this is then resistance. Resistance, resistance, resistance is stopping you and telling you do not buy into this. But look at this. Dumps even more, happy days. And then you can rebuy back here when it becomes support. Not at the moment of crossing, when it does something simple, i.e. zump, and then it then becomes a support level, i.e. it doesn't break below it and it's happy and it's settled. That is how you do it. Perfect. Again, how many days have you got here? You got what, maybe 4 or 5 weeks of that upward rising, and it dumps on you. It dumps massively. You're not going to get much gain on this, but ultimately, if you're looking at things and you're taking profits, you could probably see anyways, if you zoom out on this, if you've got a bit of a, obviously if you've been switched on in terms of what what you're looking at, you could probably maybe draw a little line from this point to this point and think, well, actually, there's a potential trend line here. When you think of it that way, it's a potential area. Where can this go to? Where is this top going to align to? What is it going to do? But again, there's all kinds of different stuff you can do as well. Another thing you can do, I know I'm going totally off tangent here, you can put a Fibonacci on here and think, well, actually, it's pretty savage. That's a pretty meaty drop, and it's retraced quite a big number. How high will it go? Who knows? What are the market conditions like? Is it ropey? Is it COVID-19 coming? You don't have to go off these numbers, but the best thing to do and know about is knowing when not to buy and when to buy. And this is all this indicator does. But what I want to look at where this level is. Reason being, if you go from this low to high, it's an area of interest. And why is it an area of interest? Look at all these levels here going right the way across. And that is an obvious turning point, and where you could probably think, well, actually, if I'm accumulating a position and I'm looking to buy into a position, I just need to look at this left-hand side. Why is it important? You've got the 618 level here. Cool, happy days. We've had levels here, but we've had levels below. Dollar cost averaging. Look at the obvious places to go. And if you see obvious, look at putting orders in around those obvious areas. It sounds really simple, but you can go all the way down to the floors if you so wish to. Obviously, we have been in the past. Look at how this wick went all the way down and penetrate into this region from November, December time, 2018. It's vitally important. So use these levels of previous regions because, as I say, you don't know what's going to happen. I'm going to show you my versions now. Now, obviously, EMA 89 is what's on the screen here. The moving average 100 is also very good. If you so wish to, you don't have to, but another one as well that is also quite good. And this is really if you don't have much time in your life. The moving average 200 again is another one which is quite slow. As you can see here, very slow and sluggish. Ultimately, it's very good for like certain altcoin investments. But as I say, if this becomes resistance, obviously you no longer need to buy any dips and stuff. But you got to remember, it's kind of quite slow. So you got to remember that. So maybe depends on you. If you are taking profit, happy days. But if you're looking to kind of get a trend kind of analysis basis, you may want to go a bit quicker than the 200, but it's entirely up to you. You can use a 50, 55 EMA is a Fibonacci number. The 89 EMA is obviously a Fibonacci number as well. Cool. If I go to my chart, which is kind of cool, I'll show you a few little things. Now, I want to show you an example of a range first before we go anywhere. The reason being, I want to kind of explain that to you. Why is vitally important. So if you go on Polkadot, for example, it's currently ranging right now. And it's a pain. If you look at this level, this is a ranging chart where the EMAs are quite, in with themselves, and it's within a known range. Weekly levels and a Fibonacci level here, quite obvious. So in terms of that, you got to wait for a pull up and then a pull back, then whatever trend, or if it's going up or down, if that makes any sort of sense. Moving on to the likes of what my EMAs look like. This is mine. Mine's on the daily time frame, a lot more quicker. I can start getting the dips a bit more. It's a lot faster. This is the EMA 8 and the EMA 13. This is much faster if you've got a bit more time available, but you can use this on the weekly time frame much better than you would on the higher time frames because they're a lot closer. As you can see here, you can get this nice little crossover. It is then support and it carries on going all the way up. Happy days. Again, going down, it becomes resistance. It's on a weekly time frame, but obviously it breaks above it here as well. So it's entirely up to you how you read these, but the design of them, the simplicity of them is very simple. If I go to actually the 3-day chart, where is it? Hello. 3-day chart is really good for this as well. As you can see, you can get in quite nicely sideways for a while here. I remember that time it was a pain in the ass. Pull back up, pull back down again, back up. So this is telling you the overall trend, but what you need to decide is actually, well, what is it telling us? Well, I could adapt this very easily and make this really simple. The simplicity of this is simple. I can go to my indicator, and if I want to, I could put an MA of any significance that will give me the overall longer term trend, which is vitally important too. You know, simple as that. That could be easily a 50. And what will that give me? That will give me quite good clarity that what we have actually got here. But if I want to go even deeper and go to the 100, it'll probably tell me exactly what I want to see without worrying about it. As you can see here, you know, when you look at Bitcoin, for example, big massive upswing, downtrend. Back into an upswing, but you know, obviously rejection in the past. We go down again, back up, and we've been holding ever since quite nicely, still above it. So you can make some solid decision making here. This is all it's for, decision making. If you know it's in an uptrend, you buy the dips at support level, simple as that. If you know it's in a downtrend and it's resistance of the longer term moving average on the higher time frames, you no longer buy the dip. You wait for potential lower areas to put your orders in. For example, here, imagine this is now in a downtrend. You would look for the obvious. You just zoom out on the higher time frames. Go to, say, for example, the weekly time frame, just to give you a big pointer on this. Look for where things have turned around. Area here, area here, area here. You know, obvious area. So you got 10k, you got 6k, and you potentially got 3k. Obvious areas to put orders in. You never know how far it's going to drop. That's the beauty of this, any market really. So I hope that video has helped with the line of sequence that we've done. I am going to do a cash out video very soon, probably next few days, to show you and demonstrate what you need to do and what you need to know. And I'll go through the changes in the tax rules. I'm not going to be doing accounting sort of stuff. A lot of people have been asking. Back in 2017, 2018, there was technically just capital gains tax for crypto. It's changed since then, so I'll go over that, as basic as it is. Ultimately though, if you are enjoying this upward rising, remember, if you have made money, take a little bit off the table. If you feel it's overstretched, or if you feel there's potential, ooh, there's too much on the line here, take a little bit out, little percentages here and there. As I say, if we go into a downtrend, it's starting to look a bit ropey and the bears are in control, just wait. Do a Fibonacci from low to high, see where it could potentially go, look at previous levels where it stops and turns, and place orders for investments. If you've done your research, if you know what you're buying, and you know when to control your emotions, makes life much easier. Enjoy.